Finance sectors are clearly undergoing significant transformation in response to major structural and macroeconomic changes. In fact, they're challenged with managing risks across diverse markets, fostering resilience amidst economic uncertainties, and devising recovery strategies and geopolitical shifts along with unexpected disruptions.
This is true, and there is a need now, Avan, for banks to adapt their operations. Then, of course, leverage all the technology at hand and foster international partnerships to thrive in what is an increasingly interconnected world, and this while maintaining stability and sustainability. So, of course, we are looking at this discussion, and we are going to call Ajay to join us here on stage. Ajaya Sharma, Senior Editor at ET Now, and let's get a thunderous round of applause for our esteemed guest, Mr. Bill Winters, Chief Executive Officer at Standard Chartered Bank. Sir.
Investment banker. So he understands risks and financial markets, and now, of course, such a large commercial bank. And it is interesting, I was just thinking what a coincidence that we are having this discussion with a former investment banker and now large global bank chief right after a big hedge fund manager. Because the hedge fund manager's focus is about maximizing returns. But a good banker actually focuses on minimizing risk. Am I right, Mr. Winters?
We like to do both.
Well, you can do both, of course, because shareholders focus on higher returns. And in fact, Mr. Winters has recently upgraded their own bank's outlook and guidance as well. Let's start from there. When a large bank chief like yours at an international platform says that the outlook for the bank is good, you are kind of operating across geographies, and your earnings are sensitive to so much vulnerability. So I want to understand what backdrop, in what backdrop have you raised your guidance, and you're sounding much more confident and positive lately.
If I could just say first, thank you for having me. It's a real pleasure to be here. I've been in Delhi now for a week. I come probably 3 or 4 times a year to India, see different parts. I got a chance to travel outside of Delhi on this trip as well over the weekend, and I must say this, the underlying momentum and the real progress that I see is just tremendous. Standard Chartered, we've been operating in India for 170 years, so I think we have a pretty good sense of what's going on in the country. There have been lots of ups and downs. Right now it feels like a real up. And
okay.
Now, to your question of how do we look at our own outlook, if you sat in our risk committee, which we have once a week, and we have our board once every couple of months, you'd think that the world is coming to an end, because we talk about all the things that all of us talk about: geopolitical conflicts, concerns about inflation, interest rates, etc. We could get very, very desperate. If you then go from the risk committee meeting into the are we going to grow committee meeting, you sense tremendous excitement. Why? Well, it starts right here in India, and we heard from the Commerce Minister, we heard from Ray Dalio, that an economy that can generate sustainable growth, let's say between 6 and 8%, with a long runway, with 1.4 billion people. It's not a small economy; it's a very big economy. That's a fundamental driver. But the rest of the world is okay as well. Not booming like India.
Sure.
But let's look at the U.S. Right, tremendous resilience in the face of an interest rate onslaught, if we could put it that way, and political dysfunction. Look at China. Now, we all want to be very desperate about China. We're not desperate about China. We see China going through one of the most profound industrial transformations that any country goes through. And inevitably, during those transformations, it's very, very painful. It's still generating 5% growth, not a disaster, but it's painful. They'll come out the back end of this. Obviously, they could make mistakes and not, but we don't think so. So the 2 biggest economies in the world, U.S. and China, I think are both looking okay with their problems. The fastest growing economy in the world, which is a very large economy itself, is just fundamentally bullish.
Yes.
And all of that supports the banking business.
So, okay, let me take a leaf out of your answer. You said that the two large economies of the world, which most of the people believe are in not a great shape. Actually, you have a contra opinion that US and China are doing okay. So the over pessimism around US and China is actually not right in your view? Is that the case?
Personally, I don't feel a lot of pessimism about the U.S. Certainly the equity markets are saying it's the best it's ever been.
Sure.
The credit markets are functioning perfectly. The corporate profitability is extremely strong. So sure. I hear concerns about where things could go in the U.S. Of course, we've got concerns about a very high debt level. We've got concerns about political dysfunction. We've got concerns that the only way to bring inflation down to the Fed's target rate will be to induce a recession. But there are no signs of that right now.
Sure.
There are no signs of that at all. Now, China is much more complex, much more complex. And we all got used to 10% plus or 7% plus GDP growth in China. That's not in the foreseeable future. We're looking at 5% growth, which is really not enough to get them out of the middle income trap. But as I say, you've got segments of the economy, call it the new economy,
sure.
that are growing in double digits.
Mr. Winters, I want to understand from you that a banker can see risk building in parts of balance sheets, corporate balance sheets, much ahead of, when it actually blows up, so that they minimize it beforehand. Are there any big risks building anywhere in China, in US, or any other part of the world, which, this is the target audience, they are mostly financial market participants, or even strategists who have an eye on global developments closely. Would you like to bring any such risk to the table or not yet?
I think we've seen a few, let's call them small bubbles that have burst, and then one big bubble. The one big bubble is the real estate market in China, and you could say that that's a global real estate, commercial real estate bubble, and it was on the back of very low interest rates for a long time. The bubble has burst in China. The Chinese leadership is trying to manage that bubble. It's been painful for participants in that market, including a little bruise, I would say, on Standard Chartered. Nothing material, but others obviously have been hurt. The U.S. commercial real estate market is going through decompression, but it's against the backdrop of a very strong economy.
Sure.
So, but you look at some of the other bubbles that have burst. The crypto bubble, right? Now, it was in the overall scheme of the economy, it was tiny. If your kid put all of his money into Bitcoin, or probably worse,
there was no
Dogecoin,
contagion because of
yeah.
Bitcoin or crypto, right?
But these are little bubbles. They're popping regularly. So as we look right now, we don't see tremendous bubbles in the global marketplace.
Smaller bubbles, but nothing to be really very wary of. Okay, let's come back to India.
I'll just give one. I mean, Ray Dalio, I thought, was gentle with his own view about the U.S. debt market.
Yes.
You got the question: are U.S. interest rates a bubble given the level of U.S. government deficits? Possibly. Okay. That would be the one, and that's a big one.
Okay. Mr. Winters, I want to understand opportunities in India from your eyes. You've been operating here for a very long time. It's a very vibrant, market right now. Big M&As, mid-sized M&As, capex, green shoot of capex earlier visible. What kind of opportunity does Standard Chartered would like to participate here? Because local banks are also very aggressive. You look at the commentary coming from our banks. Is there big appetite for everybody to have their share of profits here?
Yeah, I think there's enormous opportunities. So we look at the national priorities as we understand them. First is to continue the build out of a national infrastructure. That's extremely capital intensive. There's not enough capital in the country alone to meet the ambition. It's working pretty well. But our job is to bring international capital together with local expertise to finance the building of highways and ports. Renewable power, right? Along with China, the biggest investors in renewable power in the world. The investment is massive. The success is tremendous, right? To get to 45% renewable power.
And our government is very focused and very serious about energy transition.
Extremely focused. So that requires technical transfer and technical expertise, and it requires money. These are just two of the opportunities that are very clear. The most exciting thing to me that I've seen in India over the past 5, 6, 7 years has been the flow of capital from the large businesses in India, which historically had been focused on investing out, and now are focused on investing in. So they're bringing their money back in, and many of you are in this room. That's the strongest vote of confidence you can get. These are insiders who know the business well, and they see the investment opportunities in India, whether it's in renewable power or petrochemicals or infrastructure development. The opportunities in India are greater than any opportunities outside.
What about cross-border banking? What are the opportunities do you see here?
Now, India is still a relatively closed economy. So when I look at some of the other markets where we deal, we're one of the top 3 trade financing banks in the world, operating everywhere in Asia, Middle East, Africa, and obviously connecting through to the U.S. and Europe. And the import-export flows in India as a percentage of GDP are relatively low. Now, part of that is the fact that it's a huge economy. It can be very circular. But the export economy is not fully developed in India. That will change with these massive investments from companies like Samsung, Foxconn, Apple. I mean, that obviously will be domestically led, but export contributing. But it's also a willingness to import and an openness. We've heard from some of the business leaders who are here from outside of India that it's still a little bit hard to get business done.
Okay, let me come a little more specific on that one, because we are financial journalists. We have to get a scoop out of you. There was a very large cement transaction recently done, and foreign banks played a very large role in that, and Indian banks perhaps couldn't. And some bankers were saying, we could have perhaps, funded that large transaction. Give us what industries are you interacting with? Where do you see big transactions happen in India? Are you looking forward to financing the growing ambition of Indian businessmen now?
Yeah, of course. That's our bread and butter is financing companies that are investing in India to develop jobs and growth. That's what we do. And I think a disproportionate share of the investments right now are in infrastructure, including sustainable power.
Sure.
It's just that they're so capital intensive. The Indian banks are extremely strong and very competitive. So they've got a strong presence, very strong physical presence across the country, much more than a foreign bank could ever have. And they're well capitalized. So Indian banks are some of our biggest clients because we help them with their business outside. We help them with US dollars, for example. But we also compete from time to time.
Yes.
But for the most part, we work together. And
Yes.
it's quite symbiotic.
How do you see, one last question with you, there's I would say the highest growth rate in affluent population anywhere in the world right now is in India. Wealth management, capital market related opportunities are opening up like never before. What are your thoughts on how things can take shape here?
I think it's very important, and it's happening, but it's very important that the wealth management industry in India continues to develop, and that Indians can build a good, strong, diverse portfolio of global assets within India.
Great.
And what happens now is if you want a good, strong, diverse portfolio of global assets, you move your money outside of India and invest through Dubai or London or Jersey or Hong Kong or Singapore. And that's okay, but that money should stay at home. It's more likely to find its way back into the Indian economy if it never left in the first place. And it's a work in progress.
Yes. Great, Mr. Winters. Thank you so much for joining us this afternoon at ET Now GBS. Ladies and gentlemen,
Thank you.
Round of applause. Thank you very much. Thank you. Great.
Quick, pacey discussion. Mr. Winters, such a pleasure having you with us. Great conversation. Ajay, thank you.